All right, we're live. So welcome back to Dapp University. So today I'm going to talk about something that's actually pretty good for crypto and this entire space as a whole. Despite the fact that cryptocurrency prices have been going down, it looks like there's always bad news from like regulatory uncertainty. That's a lot of sort of the fear that we're seeing in the space right now. Bitcoin has broken its $30,000 support level that a lot of people have been, kind of worried about. But today I'm talking about something that's actually positive for the crypto space and why you should care about it. So before we get into that, if you're new around here, hey, I'm Gregory, and on this channel, I turn you into a blockchain master. So if that's something that you're interested in, then smash that like button down below for the YouTube algorithm and subscribe to this channel. And if you want to become a blockchain master step-by-step from start to finish, then head on over to dappuniversity.com/bootcamp to get started today. Last but not least, nothing I'm saying in this video is designed to be financial advice, and there's lots of scammers down in the comment section below trying to, steal your crypto from you. So just ignore them. I'll never give you my phone number or ask you to invest with me. All right, so we got people jumping in the chat here. We got Culture Highs, we got Ethan, Automatic, Susan, Sean, THX. Welcome. So yeah, let's jump into this. So yeah, we'll look at the crypto markets here in a second. But one sort of breaking piece of news that I want to talk about today, that's actually pretty good for the entire crypto space as a whole, is more news about crypto actually being adopted as a legitimate payment solution. Okay, so there's lots of different things you can do with cryptocurrencies. You can speculate with them. If you have Ethereum-based cryptocurrencies or similar, you can use them in DeFi. But payments are definitely one way we do this, and these are powered by stablecoins. And typically, we have some sort of fear about what's going on with stablecoins right now, like Tether, is it fully backed? There's regulatory uncertainty around stablecoins. And earlier this year, we saw pilot programs of companies like Visa getting into this payment space and actually testing using blockchain as a payment solution underneath the hood, and how they were actually settling payments with stablecoins underneath the hood anytime a new transaction was created. And whenever we talked about that on this channel on these live streams, again, if you want to find out about this as soon as it comes out, we do these live streams Monday through Friday on this channel. Just turn on notifications down below, subscribe. You'll find out about those whenever we go live. Whenever we talked about Visa launching this program, I said it's just a matter of time before competitors get into space and try to do the same thing. And so today we actually do have news of this. So Mastercard to test USDC payments as stablecoin scrutiny intensifies. So that's like what I was talking about a minute ago, that's sort of the regulatory fears around stablecoins. But the good news to look at here is Mastercard is actually getting in the space and trying this out. So what are the important key points to look at here? Number one is what currency are they using? It's USDC. So that's one of the most prominent stablecoins out there. I don't have clarity in this article and the other articles that I looked at on which version of USDC that they're using. If I take it at face value, I'm just going to make the assumption here that they're going to test this on top of the Ethereum platform. I don't have an official source on that. That's just my inference here, so let me be fully transparent on that. There are other versions of USDC running on other platforms, okay? But that's the first thing. So using USDC probably on top of Ethereum, but what's the other sort of big thing here is that whenever the payments are actually made, that it's using the actual blockchain for settlement, okay? So we've seen different cryptocurrency cards in the past where basically the user holds crypto in their wallet, and whenever they swipe their card at the point of sale, that cryptocurrency gets converted into fiat currency, and then it uses the same payment rails that the regular credit card system today uses. There's no real technology improvement, okay? Basically, it just holds crypto, it cashes it out into cash, and then the merchant receives cash. But with these, crypto credit card solutions, they're actually using blockchain technology under the hood. So at the point of sale, whenever the, swipe happens, that the cryptocurrency gets converted not from crypto to fiat, but crypto to stablecoin, and then the payment is actually settled on top of the blockchain itself. And so why would you want to do that with a blockchain in the first place? Well, you're getting benefits of the blockchain over the traditional financial rails, which is just faster settlement, transparency, in some cases fees, depending on how it works. I mean, it's quite expensive for merchants to accept credit cards. In some cases, depending on depending on what price point you sell items at. Typically, it's based on a percentage of the sale, and if you sell higher end product, the total amount is greater, and those fees could be less if you're using blockchain. There's lots of different benefits to this, okay? And to me, this is really great for blockchain because of the technology in the hood, because basically, one big use case I see for blockchain over the long term, especially with Ethereum, and this is why I'm so bullish on Ethereum, is new financial infrastructure. So we have all this old financial infrastructure out there, like Swift. Basically anything where you're settling credit card transactions, you're doing wire transfers, these things that are slow, have a lot of fat baked inside the system. A lot of this can be automated away. A lot of this can be simplified and be made more efficient. And we're already seeing experiments of that with pretty major players, like I said before, Visa and now Mastercard, to follow suit. So I'm super excited about this. This is good news for the overall crypto space. It shows that people are still innovating and building things for the future despite what's happening to cryptocurrency prices. And inevitably, there's going to be trolls in the chat that say, "Yeah, but the price is still going down." Like, okay, I get it. Like, we're going to talk about prices here in a minute. I'm not making this video to promise you that this is going to resurrect the Bitcoin price or anything like that. Typically, when we're in these bear trends, this positive news really has no impact on the price of the cryptocurrencies themselves. That's not why I'm making this video. The whole purpose of this channel long term is to focus on the actual technology. Of course, we talk about cryptocurrency prices quite a bit because that's what people want to talk about. And I think it's awesome to talk about. But the purpose here is that this is good for the underlying technology, which at the end of the day can actually be good for the cryptocurrency prices long term, but it's probably going to be a lagging indicator. So what do y'all think down in the chat here? And also, it's pretty nice to just have a relief of something that's good news when it seems like everything else out there right now is just FUD, fear, uncertainty, and doubt, and prices going down. Oh, somebody says thoughts on the EU wallet ban. So I don't have enough information on this. I just saw it break before we went live. It seems like it's an overhyped headline that's going around. I haven't done any due diligence to fact check it. And it looks like it might even be an older article. Somebody says, I don't want to be a blockchain master anymore. So why is blockchain the future? There's lots of different reasons. I mean, think about the reason I just told you a second ago, which is improvement of current financial infrastructure, making things faster, cheaper, more efficient. That's sort of the name of the game with technology. Okay, so let's actually check on the cryptocurrency markets here. Let's check on Bitcoin price. Of course, we did break our, $30,000 critical level. More than anything, I think it's just a really strong psychological number for people. Let me just find the overall index here. Yeah, so we're trading at $29,771. I think the most important thing about this, the few most important things about this latest move is that we actually have a daily candle body that's down here firmly in the 29,000s, okay? And there's probably no way it's going to close above it. We're in this downtrend. I don't think you can really call this a crab market anymore. I think you have to be pretty honest and say that this is a bear market. We just don't know how long the bear market's going to last. The real question is it going to be a bear market that's as prolonged and as long as the last bear market? Or is it going to be, shorter, basically, or less severe? So there's two possibilities here. One is there's two dimensions to this. There's shorter in calendar time and more or less severe or as severe in terms of percentage drop. Okay, so the last Bitcoin drop went from 20,000 down to 3,500. So the question is basically, is Bitcoin going to do that again? And if it does, how long will it take for Bitcoin to resume an upward trend? So we're in a scenario where Bitcoin's fallen pretty far, pretty fast. And so one possible scenario is basically that we have something that's of similar magnitude, but maybe it's diminishing in terms of percentage. Maybe it's not as bad as last time, but maybe we still can go down to $20,000 here, but that we actually recover faster. And if that's the case, that seems what's more likely, because a lot of this seems really accelerated. We went up pretty fast, went down pretty fast. And just by that logic, it seems like that would be a kind of a faster cycle. So we'll see what happens. Let's check with the ETH USD. I mean, all bets are off at this point. pretty much every like plausible theory and model is kind of getting somewhat invalidated, at least right now. I mean, we're pretty far off from our stock to flow. We're pretty far off from a lot of people's predictions. I think it's one of those things where anybody with half a brain is just kind of waiting and seeing what happens. So same thing for ETH. I know that's kind of like an uncomfortable place to be in, where it seems like nobody really knows what's going to happen, but I think that's the truth. And, you know, time will tell who was right. I think there's a lot of people that are going to be dead wrong. So let's see here on ETH USD. So ETH's down into $1,774. Of course, the meme floating right now is that, you know, ETH is going to be $1,559 on August 4th when EIP 1559 rolls out. So we'll see if that meme becomes reality or not. Yeah, what am I looking for in the cryptocurrency price? Is basically, I want to see us basically make, well, first of all, with ETH, I don't think we're in a scenario where ETH is going to decouple from Bitcoin's trend. I mean, I think it's getting drugged down. Everything's getting drugged down with the market. Bitcoin's, you know, leading the charge here. Let's see here, BTC USD. What do I want to see? Basically a trend reversal. So what would signify a trend reversal in this case? First of all, it would be these basically Bitcoin getting above these moving averages. I think moving averages are pretty important here. Like, again, I'm not a big technical analyst, not super sophisticated, not trying to forecast what Bitcoin's price is going to be on a certain date. But I think the moving averages are important because they're an indication of the current price performance compared to the price history, the past performance, okay? So I'd love to see Bitcoin get above these moving averages, okay, to indicate that it is moving in a positive trend. I would like to see it use these moving averages as support because right now it's there at resistance, like it can't get above them. So I'd like to see them get above. I'd like to see them hold the support. I'd like to see us making higher lows because right now we're making lower lows, right? Before we get too excited, all right? And until we reach something that looks like that, we're still in a bear trend. So how long could that take? You know, nobody knows for sure. We could be in this like sideways weird chop for the rest of the year. We really don't know. Time will tell. Or another scenario is we basically, go farther down, and it takes us more time to recover. So we'll see. The big thing is here, Bitcoin is a massive momentum reversal, and it's going to take a lot of energy to reverse that momentum, and also a lot of fundamentals. And I'm just not clearly seeing right now the big catalyst for that type of thing to just push it forward fast. So we'll see. All right. So one thing I did see yesterday come up that I know people are a little bit worried about. Let me just pull this up here. So this is with BlockFi. So BlockFi hit with cease and desist in New Jersey. All right, so some people are getting kind of scared about this. I want to kind of shed some light on this and what you need to understand and kind of parse out for yourself here to kind of separate the fake news from reality. So BlockFi is basically let me just pull up their website and actually describe them as they would describe themselves. I could give you an explanation, but I just want to see what they call themselves. Be generous here. So they call themselves Future of Finance. Let's see here. Basically, they're a crypto exchange, but you can also deposit crypto and earn, right? So it's like a crypto savings and lending platform. How'd you get the summary that way? So basically, like you can deposit Bitcoin on it. And you can't earn interest on Bitcoin natively on the Bitcoin network, but if you deposit in BlockFi, they'll do loans on the other side, and they'll give you interest on your Bitcoin while you hold it there. So they've supported other crypto assets as well and expanded, but they just were hit with they were just hit with a cease and desist in New Jersey. So. Let's break this down because some people were super freaked out about this, but it's really only one state. It's New Jersey. And the other thing is it's for new customers. Okay. So basically, they're not going to allow new customers to sign up in New Jersey. Now, this could be the beginning of broader regulatory crackdown. I think this puts some panic in people's minds because there is so much regulatory FUD going on right now. So one sort of theory here is why this is the case is because of certain assets that they've listed. So basically, in a blow to one of the biggest names in crypto, the New Jersey AG accuses BlockFi of violating securities laws. So basically, the Attorney General is saying that, like, you're violating security laws with the assets you're listing and the practices that you are doing here. Now, we do see, like, lending and borrowing supported by other assets, but I think what I'm seeing floating around online is that basically it's got to do with the actual assets that they are listing, where there's question marks around those. So things like Bitcoin and Ether, for example. This is my understanding. Okay, don't take this as the final truth. But my understanding is that Bitcoin and Ether are, not really under the SEC. They're sort of widely thought of as more as commodities than securities. So that will fall under the CFTC, I believe. But when you have other assets they've listed, like, the Uniswap token, the Uni token, for example, there's more of a question mark on, is that a security? You know what I mean? And basically, if you've listed that on your platform, you're now doing like savings and lending with those, then you're potentially violating securities laws in this case. And so that's where the sort of FUD comes into play here. And some people are worried this is the beginning of a larger sort of regulatory scare. So let's see. Yeah, totally. Somebody says, "Gonna do more tutorials on blockchain development." Yeah, we got a couple more tutorials coming down the pike. So okay, let's take a look here. Let's see if we have the questions in the chat. Somebody says, "So is Uni a security?" Well, I think we have a lot of question marks around what some of these things are. And that's sort of what the fear here is. So what do I think about the THORChain exploit? We talked about this in a live stream the other day. So I don't think the THORChain exploit's like a death nail for the protocol or anything like that. They were able to at least put a plan into place for, compensating those that, were affected by the exploit. I think we're going to see this with a lot of DeFi projects where basically, we're building software that's high risk, so it's risky for y'all to participate in all this stuff. I try to make that as clear as I can in these videos. I think this is game-changing technology, but while it's still early, there's significant risks involved, and I do expect those risks to diminish over time as the stuff gets, better, okay? But yeah, totally. I think the THORChain exploit was unfortunate. I'm glad they're patching things up. I still think it's a great project, and I hope for the best for long term. All right, so let's look at a couple other things here. So another thing we have is on the ETF front. So basically, people for a long time have been looking forward to cryptocurrency ETFs or exchange traded funds. So basically, why are people excited about this? Well, essentially, this would be a way for way more people to get exposure to crypto through traditional means, right? So basically, people having brokerage accounts, anywhere where you might, purchase equities in the traditional world, or have access to other exchange traded funds. If you include crypto in that list, that just instantly plugs you into the network of way more users than we currently have now. Okay, and we've seen, ETFs help other assets in the past. Okay, and that's one reason people are excited about potential crypto ETFs. And we've seen ETFs pop up, all over the world. The U.S. is one of the places where we have lots of hang-ups. We've seen lots of applications for ETFs in the United States. To my knowledge, nothing has been approved yet. But one significant effort that we see here is Grayscale. 100% committed to turning the Grayscale Bitcoin Trust into a Bitcoin ETF per their CEO. Okay. So we talk about Grayscale some on this channel. Of course, people have been worried about Grayscale this past week because of the big Bitcoin unlock that's happening. Basically, whenever you participate in this, you buy shares in the trust. You get exposure that way, but you're locked up for a certain period of time. And we had a major unlock happen where basically people have purchased Bitcoin when the price was a lot lower. It's been unlocked, and then now they're able to decide whether they want to buy or sell, right? So, anyways, but Grayscale is effectively committed to turning this trust into an actual ETF, which is awesome. So basically, I think what we're seeing is a race for sort of a space race, so to speak. You know, like the first person trying to put somebody on the moon. We've seen lots of different companies try to throw their name in the hat and try to get the first U.S.-based Bitcoin ETF. I think Grayscale is kind of trying to join that race here. Of course, we saw Kathy Wood from ARK Invest file an application for this. We've seen lots of different people file applications. So there's lots of people who are trying. Nobody's successfully done it yet. All right, so let's see here. See, they got questions in the chat. Tether, talk about Tether and the effects of Tether on the market. Let's see here. Crypto derivatives don't really create tech-savvy investors. I know what you mean by that. So do you think centralized services will integrate with DeFi long-term, or will DeFi take over entirely? So I think we basically want to create the option and let the market decide, all right, as long as there's always the option on the table. So we've seen this like recently with, the compound finance treasury product, where basically they're creating a way for, traditional institutional investors to convert their corporate treasuries, at least part of them, just taking cash and then getting the yield that's generated by decentralized finance or DeFi. But the entire time, they're just keeping their funds in dollars, okay, liquid dollars. That's my understanding. So this is an example of basically traditional finance sort of being built on top of DeFi. I think it's a good thing. I mean, some people will say, "Hey, this is like not even close to the spirit of DeFi." Well, my whole vision here is that you create something that's decentralized and open, and then you can do with it whatever you want to, as long as you keep the option on the table for people to get their hands dirty and do it the decentralized way. So, if you are just an individual and you want to participate in decentralized finance, you're not using like compound treasury. You're like custodying your own funds. You have your wallet. You're going out using the applications. Then you're probably gonna outperform the people who are using compound treasury, but they don't care. I mean, they're just taking a lot of money and parking it in this thing, and they just want the benefit. But you're getting a higher rate of return probably, assuming you know what you're doing, and you're using DeFi that way. But you still have the option on the table. But DeFi still benefits on the whole, even though two people are participating in wildly different ways. We just want the options to be there. That's the whole point. We don't want people to say, okay, so we like things like compound treasury that's like, whitelisted, KYC'd, and safe, but then we want to outlaw, direct access to DeFi for individuals, right? We don't want that. But as long as both options are on the table, I think it's good for the space long term. And I do think that we'll see basically more and more sort of DeFi products integrated with regular consumer interfaces, where some of the DeFi aspect of it is abstracted away, but the end user is getting just the benefit, like crypto banks, for example, just like depositing regular money, kind of like compound treasury, getting high yield, and then, you're not probably venturing very far off into the crypto ecosystem. That's one way you can be using blockchain without knowing you're using blockchain. I think we'll see that type of thing happen, but I still think it's good for the space. So there aren't any more L2 scaling solutions releasing soon. So, so some of them basically are already launched, but they're just sort of in these like whitelisted phases, or they're in these kind of early development phases. Like Arbitrum is one. You can actually join. I believe they're doing just like a soft whitelisting for developers. So I think all you have to do is really apply, and there's probably not much friction to getting like on the network if you want to build something and put it on Arbitrum. We do see other things like ZK Sync launching. I think the real race is going to heat up when more apps, like when the guardrails are off, more apps can launch without whitelisting, and we can start to see that competition heat up. I don't have a specific timeline on that, but I definitely think still before the end of the year we're going to see pretty significant layer 2 adoption. Spice says Immutable X is zk for NFTs. Yeah, Immutable is an awesome platform too. Somebody says, first time watching the stream, any thoughts on how a PHP developer can transition and get a job in blockchain development? Yeah, so I would just say you got to learn that if you got significant experience, I mean, you already understand, if you understand PHP, you understand how web development works. Basically, in blockchain world, your blockchain is going to be your back end. And so if you understand front-end development, I'm assuming if you know PHP, you probably understand like HTML, JavaScript, some of that type of stuff. So if you already have that knowledge, you have one side of the equation. The other side is just the blockchain knowledge. So you want to learn, how blockchain works. You want to understand how smart contracts work. You want to, do that type of thing. I mean, the easiest way, if you're a PHP developer, like if you just want to start working in blockchain right now, like tomorrow, what's the fastest way to do? Well, just go work at a company that does blockchain, and then work on the front end side of things. If they have, there's lots of blockchain companies that have front end roles. Okay, and then over time you could transition into becoming on full stack or work with smart contracts as you go. If you really want to become a smart contract developer or a full stack blockchain developer, I would focus on that skill. Learn it outside the workplace. Get your skills up to where they need to be, and then apply that way. You're gonna have to learn something new, but if you're a PHP developer with some good experience, then you've already got a lot of good experience to start from. You're gonna have a huge head start over a rank beginner, put it that way. But if you're a rank beginner and watching, that's not to discourage you. I've helped lots of people who didn't know any programming before, become real world blockchain developers. So one thing I'm actually going to check on here. So another big question mark people have for crypto right now is, definitely what's going on with the overall markets. We talked about this some in the live stream yesterday. I think there's a lot of fear right now with sort of the global thing that's going around. There's a lot of superstition on YouTube that I'm not supposed to talk about. The thing that's in the air that has plagued the world for a year and a half now. You know what I'm talking about. There's a superstition. I'm not supposed to say it on YouTube. But anyways, there's a lot of fear about that. A lot of fear, kind of what's going on in the markets. Of course, we did see we saw the market kind of take a tumble. Look, we were having a recovery here, but previously we essentially wiped out a month's worth of gains. So the whole point I'm trying to make here is crypto doesn't exist in isolation. Basically whenever the big crash happened last March, crypto went down with it about 50%. All markets went down significantly. If this similar type of thing happens again, then we could see something that could have significant downward price pressure on crypto. That really has nothing to do with our overall bull trend, bear trend, fundamentals, all that type of stuff. It'd be a totally different thing altogether. Now, that being said, I think the likelihood of this happening to the same degree is less, because a lot of people are worried about it. Okay, and when a lot of people are worried about this type of thing, history doesn't repeat itself exactly the same way twice, typically speaking. All right, but it's definitely something to watch out for, and I don't think is out of the question. And I know a lot of people are sitting here kind of waiting to see what happens with this. So that's something to keep on your radar. It's all the reason I bring it up. Yeah, there's a conference tomorrow that Elon's supposed to speak at for Bitcoin. Somebody says, how have yields and things like Beefy, Pancake, Bunny, etc. done in the past during a bear market? So this is a good question because we haven't really had these DeFi products widely available during a sort of a crypto downtrend. DeFi was kind of an idea in a lot of people's heads at the peak of the last cycle. I mean, I was here in 2017 when the market crashed. We had MakerDAO was kind of coming out. We had DAI. We were starting to see the beginnings of things like compound finance, like Chainlink started to become a thing, synthetics, then Aave, and then, all this type of stuff. It sort of happened throughout this time period. Okay, these things actually became products. Some of these things did ICOs, raised capital, created products. But we didn't really have, I say mature DeFi, right? Like, which we still don't really have mature DeFi, but we didn't have minimum viable DeFi until really crypto was kind of out of the depth of winter. When I say minimum viable DeFi, I mean at least 3 or 4 different decentralized finance applications that you could use and actually plug in together and have stable coins that you could transfer between the applications. Okay, that's what I kind of mean by minimum viable DeFi. So that provided yields like the person in the chat here is asking. So we don't really know how those things are going to hold up through a long-term downtrend, okay? Because we didn't really have that minimum viable DeFi until crypto was kind of out of that wintry downtrend. Prices were still low, but we had kind of bottomed and we were on the road to recovery at that point. So I guess what I'm trying to say is here, history doesn't provide us much value in that regard. All right, everybody, that's all I got for today. As always, smash that like button down below for the YouTube algorithm. Subscribe to this channel if you haven't already. That really helps these videos out so the more people can learn about blockchain. If you're as fascinated with this technology as I am, you want to get your hands dirty, how can you get started today? You can go to my YouTube homepage. You find my free courses there. They're like Udemy courses, but they're totally free. And if you like those and you want to take the next step, or hey, maybe you want to take a master shortcut entirely, you can check them out, Blockchain Master, step-by-step from start to finish, over at dappuniversity.com/bootcamp. You don't have to be an expert to get started today. Help people with zero programming experience become real-world blockchain developers in a matter of months. So that's all I've got. Until next time, thanks for watching Dapp University.